Hi guys, it's your financial coach, and today let's discuss PruLife UK's PruLink Elite Protector series. So, the Elite series has 4 different types: Elite 5, Elite 7, Elite 10, and Elite 15. So, those are the premium paying period. So, Elite 5 is payable for 5 years, Elite 7 is payable for 7, Elite 10 years, and Elite 15 years. Okay, so that's easy enough to understand. So, currently, the Elite series has the highest premium allocation for the fund value in the insurance market right now. So, what do I mean? Highest premium allocation, meaning in the first few years of the policy, you already have a large allocation to the fund value. Generally, other life insurance products don't have a fund value starting the first few years because you are paying for the insurance coverage mostly in the first few years. But with the Elite series, you already get fund allocation from your premium starting from year 1. So for example, for Elite 5, 70% of your premium goes directly to your fund value already. For Elite 15, 40% of your premium goes to the fund value already. So what does this mean? It means that you get your premiums allocated to the fund value so that you can invest early. So when you invest early, you have higher chances of growing your investment through time. Okay, so it's a really good thing to invest early, invest consistently. Okay, so for the Elite series, the main purpose of this life insurance plan is for its savings component. Again, because of its high investment allocation, this product or this program is used mainly for its investment component. Okay, so fun feature of this is that for Elite 15, you have a loyalty bonus if you pay on time, meaning within the grace period of 30 days. Starting year 11 until year 15, you get a 10% bonus for each year starting year 11 until year 15 if you save consistently and on time for the Elite 15 series. For the Elite 15 product, but for the other Elite series such as Elite 5, 7, 10, there is no loyalty bonus. Okay? Moving on, since this series is for investment purposes, so high allocation already in the first few years, since this has the highest premium allocation in the market, you need to be aware that there are large charges if you do not finish the payment period. Meaning, if you have an Elite 5 policy, you need to finish the 5-year period before withdrawing from your policy because there are large charges. So what do I mean? So for partial and full withdrawal, so partial withdrawals from your fund value, there are big charges. For Elite 15, if you withdraw from the first year, there is a 45% charge from your investment. Okay? For Elite 5, if you withdraw within the first year, you get a 40% charge. It's a large charge because when investing in an insurance policy, especially in the Elite series, you need to be aware that you will pay for 5 years, 7 years, 10 years, and 15 years. You are forced to save in this policy because they give you the benefit of investing your money in the fund value early. Okay? So when purchasing these types of policies, I mean, with any insurance policy, it's long-term thinking. You don't think that you are going to withdraw from it in 2, 3, 4 years. I mean, with any investment, you're always supposed to invest for long-term. If you need those funds within 5 to 10 years, I suggest you just put your money in the bank account, save up for an emergency fund before thinking about investment. Remember, with any investment, mutual funds, VULs, VULs, stocks, direct investments. It's like planting a seed. If you plant a seed, you take care of it, you water it daily, just like with your investments, you consistently deposit in it, you use the peso cost averaging strategy, you are diligent enough to be consistent with your investment so that your little seed will grow into a seedling until it grows into a tree. But you wouldn't expect a seed to grow into a tree in a year or two, right? You won't expect it to bear fruit in a short period of time. Okay, because that's not how investments work. Just like with gardening, that's not how planting works. So you always think with investments, especially if you invest in stocks, in bonds, long-term po ang thinking. So 10, 15, 20 years, okay? If you think you need to use the money within 5 years, I suggest save up for an emergency fund and do not invest your money first. Because with any investment, there is risk. There is the risk that your investment will lose money. There will always be risk. Okay? So I hope that is clear. Okay. So the surrender charges are as follows. And there is also a premium holiday charge. What does that mean? Premium holiday means that you stop paying your premiums. So of course, there are also large charges if you stop paying within the first 4 or 5 years of your elite plan. Okay, so I hope you are aware that a VUL policy, especially the elite series, is a commitment. If you do not have an emergency fund, if you are not sure that you can pay for 5, 7, 10, and 15 years, save up for an emergency fund first before investing. Okay, so I hope this is clear and I hope this video helps. Let me know if you have any questions and I will see you in the next episode. Bye-bye.